I would say coming into 2023, in 33 years, I've never been more excited than coming into this year. And I'm not, you know me,
Wow.
I don't BS. I came in like this little kid in the candy store. I mean, I don't want to say that on December 31st, I missed again, Jan 1, I'm like, yes, this is great.
Yeah.
But starting in, kind of Q4, I said, geez, well, I love semis. So that's okay. So that's obviously risk on. I love this thing called Bitcoin, which I've never loved in my life. I love gold. I'm really excited about that. In 2023, we took a position, which is now a decent sized position, in FDN, which is an internet ETF.
Mm-hmm. Paul Schatz is the founder and president of Heritage Capital. He has been managing money for decades. For the first time in his more than 30 years in this business, Paul thinks there's something unique about this year. Bitcoin might test $20,000 or below, but there's still reason to be bullish about the world's largest digital asset. Before going further in this video, make sure to hit the subscribe button for more recent updates. With Bitcoin price action retracing slightly after gaining 40% in January, some market participants still insist that new macro lows are due across crypto assets. Since Bitcoin has already corrected almost 20% from the recent macro lows, two remaining price targets are now in play: $27,100 and $31,850. While the timing for such a scenario varies, consensus remains absent when it comes to how the market will rebound. For Moorhead, however, the time to flip bullish on crypto is already here. Going forward, a trend change will ensue with Bitcoin on its way to fresh record highs. According to Paul Schatz, if 2022 was the year of breaking rules and failing, I believe 2023 is the year that entities instead follow the rules and enjoy the rewards of doing so. The extension we are currently seeing so far in 2023 falls within the parameters of the Wave 4, even if it has broken some near-term technical levels to the top side, thereby increasing bullish momentum.
Said, God, I'm so bullish now. I think we ripped at least 30% from here. But when I looked at all the big stocks, none of them looked like they were bottoming. They looked like they just found a point in the middle of nowhere. I know it was going to take really that December decline that retested or put in secondary lows. So am I still bullish today? Yeah, because one, I haven't heard anybody really throw the towel in and say, we know it at the bottom in October. I've got my trading notebook sitting next to me, all right? It's got every day commentary from certain people and certain amazing contrarians who, when they're positive, we're going up, we're going down.
Yeah.
I haven't seen any of the wrong people throw in the towel and become bullish. I haven't seen it really in retail. I mean, I said I was, coming into the year, I said there's no one more bullish than I am. And I don't feel like people are embracing, they're still disavowing, they're still hating the rally. They still think that recession we're in the middle of it, and then the half are going to be awful. So yeah, I'm still pedal the metal, risk on, stocks, bonds, gold, crypto. And until the market proves me otherwise, that's where I'm going to stay.
Okay. I
own it, and for a full disclosure, I bought it higher too. I don't remember the number, but it's not relevant yet.
Yeah.
I bought it higher. I did add to it. I do like it. I remember when I was writing my 2023 list, I looked at Bitcoin. I said, I think the downside maybe is 14.5. I think the upside's 30,000.
Paul became bullish on Bitcoin in late 2022, but he hasn't yet told anyone. At around $23,000, Bitcoin is still well off its peak, but the pattern moving toward the next reduction of the crypto payment awarded to miners of the digital currency in 2024 suggests another upcycle looming. Earlier this year, Coinbase said it planned to reduce its headcount by about 20% due to the impact of the crypto winter. The shares of Coinbase went into a free fall. They dumped by 14% in one trading session, the largest daily price decline in Coin's history. On a weekly scale, the stocks are down by roughly 22% and trade under $60. They charted an all-time low earlier this year at around $32 before they spiked back to $80 amid Bitcoin's recovery.
I thought the bear market was ending last year. I think when you look at, and there's not a ton of information on, gold and crypto. It's not like a company where you can do all this in-depth homework and get an edge over somebody else. So you have to have some kind of macro thesis and believe in the instrument. I mean, we run two gold strategies. I'm not a gold bug. and I'm negative on gold way more often than I am positive on gold. But to me, there's a couple of driving factors. One, while I didn't think the Fed would cut rates in 2023, I do think the Fed's going to neutral. And neutral is enough on gold asset class moving. That's number one. Number two, I thought that Europe and the UK remain that bug in search of a windshield. Those Europe and UK, those currencies are just not sustainable long term. So if they're not sustainable, you have the dollar, which had an amazing run through for 9 months of last year, and people aren't going to trust the Chinese currency. Let's be realistic. Yep. The yen, I think, is beyond crazy volatile now for a currency. So I think, and gold doesn't take a ton of buying to really move that asset class. So between Europe and the Fed, I think the backdrop is pretty good. I thought 2000. Now I'm thinking maybe I'm too conservative. Maybe it could go to 2,500. But gold isn't oscillating like a currency. It doesn't move like Apple long term. When you get these great moves, there are often great selling opportunities, not times to pile on the momentum.
The U.S. dollar, despite the dovish take on the Federal Reserve, rallied, which sank all ships on the day. The gold price tends to weaken in risk-off scenarios that have carried the U.S. dollar, as per the prior gold price analysis, where it was stated that the gold price was correcting to a 38.2% Fibonacci retracement level within a 1,000 pip box. The U.S. dollar stands tall near its highest level since January touch earlier this week amid the prospects for further policy tightening by the Federal Reserve. This, in turn, is seen acting as a headwind for the U.S. dollar-denominated gold price.
U.S. dollar index topped around September, October, but at the same time, gold bottomed. A lot of times, inverse relationship. So if you think that the foreign currencies won't do as well, does that then lead to the greenback doing well?
We know that long-term, dollar goes up, gold, oil, and other commodities go down because they're obviously priced in dollars. But that's long term. And last year we saw the dollar soar and oil soar at the same time.
Yep.
So, I always chuckle when I hear some of the commentators, some that are paid and some that pretend to be paid. They say, well, the dollar and oil can't go up together, so choose one. Nonsense. Certainly can't. It's like when they say the dollar and stocks can't both go up together. Really? Well, go look at the 1980s, the great bull market of the 80s, when the dollar soared and stocks soared. I think you could have a period where the dollar, it may not have a big trending move. It could go back to some kind of period of digestion. And you get gold that just takes off and has a really phenomenal year. I always tell people, be careful when someone says something has to happen or always happens.
According to Paul Schatz, an account of U.S. dollar index and U.S. bond yield bouncing back from its overbought zone, gold prices witnessed profit booking pressure in the week gone by. According to market experts, U.S. dollar index and U.S. bond yield have rebounded from oversold zone, and it has put brakes on gold price rally. In the week gone by, U.S. dollar rates and U.S. bond yield witnessed bounce back from its oversold zone. This put brakes on the gold price rally and triggered profit booking trigger. When asked how they gain exposure for clients, 25% said they use ETFs that invest in crypto companies. The second most popular way of gaining exposure at 17% is directly investing in various cryptocurrencies. Buying interest in gold was witnessed during mid-session on Friday when dollar index came below 103 levels. But U.S. dollars soon recovered and hence gold again witnessed profit booking in last few hours trade on Friday.
So
what are your thoughts on Paul Schatz's prediction about Bitcoin and other cryptocurrencies in 2023? Do you expect these assets to perform beyond investors' expectation in the coming years? Let us know in the comments section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.